This session here is going to be focusing on digital innovations. And the idea here is also to explore more some of the potential around digital innovations. We hear so much about, and we've heard in this session as well, how much technology, the great role that it plays, the potential that it has really to change the system, especially in terms of access to finance, in terms of green, et cetera. But ultimately, on the ground, we're seeing limited success in terms of actual scale of a lot of these technologies and solutions. And so we have launched, along with IFAD, who's represented here, and Palladium, a landscaping exercise to try to understand the key roles and drivers around commercial viability for digital solutions and how those can be achieved, as well as trying to understand a little better the role of concessional and grant funding for these types of solutions and their ability to reach scale. So this conversation here is going to be focusing on some of those questions, and I'll pass it on to our moderator, Amanda Fernandez from Palladium.
Thank you. Welcome, everybody. Yes, I'm Amanda Fernandez. For those online, those in the room have heard me talk for the last couple of days. I am with Palladium. We're an international development company. We operate in about 100 countries, have about 3,000 employees. We're privately held, and we provide services to governments, to companies, and also to donors, although our donor programs, our donor work is probably the largest piece of our portfolio of work. We also have an asset management arm in Bamboo Capital, and also our colleagues from Palladium Impact Capital, who will be presenting today, provide advisory services on capital advisory. So we're a large group, excited to be a member of SAFN. In fact, I chased down the previous coordinator and begged her to allow Palladium to be a member, and they were kind and welcoming, and I also sit on the SAFN steering committee as a result. I also oversee a global blended finance platform called Catalyze for USAID, and that works in about 26 countries, where we use everything from financial incentives to stimulate supply, to technical assistance to stimulate demand, and work on mobilizing to date over $50 million in capital across about 24 countries in many sectors, but 44% of all capital is going towards agribusiness. So we do have quite a bit of interest in the sector. Anyway, so we're here to talk about this session, this subject that is near and dear to my heart, digital innovations for agri-SME finance. As a representative of an agency that's been, I think, chomping at different sides of this problem for years, I've seen firsthand how farmers and businesses in the field, in the countries where we care about and want them to succeed, miss growth opportunities, efficiencies, and the potential to kind of maximize green growth because of lack of access to these technologies. And I personally have supported many digital solutions across multiple continents, trying to, make an impact. And I think we would all agree that, we've had varied success. Everybody that's in this work, it's varied success. You can have small successes. There's lots of small successes out there. But I think the question is have we found, is there a silver bullet? And I think we're all kind of coming to the understanding that there is not going to be one. There's going to be many. And the question is, which are those models that can be powerful, can be scalable, and can be commercially viable? That's the trick, right? And that is really what SAFN meant to do when they put this subject into their learning agenda and hired my colleagues from Palladium to develop a study which is really trying to look at this struggle of commercial viability, scale, and digital innovations. What are those key questions that we're trying to answer. And they did that through a landscape analysis that they'll talk about. And I think the rest of the session is we're gonna I guess I'll just tell you how this session is gonna go. Quick intro from me. The colleagues from Palladium are gonna talk about their findings for this landscape analysis. Then we're gonna do a quick poll. And then we're gonna have a series of questions from some of our colleagues, Hemense and others. We've got Hemense Vegarra on the line, who is a representative of a fintech. Hemense is, if I'm saying your name right, he's from AFEX, the highly sort of thought of and esteemed commodities trading platform in Nigeria that has used digital tech for their advantage. And then we have Esha from IFAD, who's also going to provide some broader context. So yeah, we don't have a lot of time, so we're going to have to really kind of, I think we stop at 12:30. We are okay, more or less. Well, we're the last session between you all and lunch, an unenviable position, but we will make the best of it. And it is a fascinating subject. For online panelists, ask your questions, put your texts online. Michael will help sort of consolidate those questions. We also have your colleague Obianuju, who's in the audience, who can help answer any questions. And then we have, and I guess I should now present our colleagues from Palladium Impact Capital, Anastasiya, Litvinova, and Joana Petrova. Did I say that correctly with the right accent?
Yes, you did. Thank you, Amanda. Hello, everyone.
Thank you, Amanda.
I'll hand over to you guys. I think you have 12 minutes for your presentation, and I look forward to it. Nice to see you. Happy early Thanksgiving to my colleagues in New York.
Thank you. Thank you so much. Thank you, Amanda. Hello, everyone. I'm Anastasiya Litvinova. I'm a director with Palladium Impact Capital, based in New York. Also joined here by my colleague, Joana Petrova, as Amanda has mentioned. So we work in the part of Palladium that focuses on mobilizing capital towards impact. And we do things like landscape assessments to understand the landscape of opportunities in the market, and then raising capital for impact funds, social and environmental entrepreneurs. So Palladium has been engaged by IFAD and SAFIN to undertake a landscape assessment of agri-tech and fintech solutions that enable agricultural small and medium businesses, smallholder farmers, and farmer organizations to access financing in East and Southern Africa. And given we're still in the midst of this project, today we will share only preliminary findings and a preview of the landscape assessment we're working on. So this sets the context for the rest of the conversation during the panel that follows. We hope to share the report with you in the beginning of January. As you know, the agricultural industry is central to fostering economic growth, reducing poverty, and improving food security in East and Southern Africa. However, the accelerating climate change, population growth, the global pandemic, and conflicts have really threatened the development of the sector, which puts a lot of pressure to shift the focus on more sustainable and resilient agricultural systems. And unfortunately, financial institutions are ill-prepared to finance this shift. And a key goal of our project, IFAD and SAFIN, and this initiative is really to improve access to affordable finance and increase climate resilience for farmers and the ag sector in the ISA region through the support of agri-tech and fintech solution providers in ISA, in this particular region. So there are a number of challenges that currently exist in the market, really preventing the capital flow or limiting the capital flow to the sector. Many investors see higher risk in lending to the agricultural sector because of the smaller scale of operations, seasonality, volatility of cash flows, and simply lack of investment readiness. Financial institutions also lack the infrastructure and resources needed to monitor and really assess farming risk in remote locations. And they tend to be reluctant to adopt new technology because of the regulations they face as financial institutions, and often pretty bureaucratic processes for approval in testing new technologies. They focus the resources on customer segments that are just perceived to be of much higher value and lower risk. And for agri-tech and fintech solution providers, on the other hand, there's more limited opportunity to gain traction and scale because there's lower density of potential user base, very high customer acquisition costs, especially for the B2C segment. And the funding significantly lags the broader tech industry because of the sector's complexity, limited exit options for investors, and some of the risks I mentioned earlier, which all creates this need for concessional capital to bridge the financing gap that Michael mentioned earlier. The enabling environment, such as infrastructure needed to scale these solutions, is also a challenge. Digital penetration is non-universal in the region. There's also often unstable access to electricity, low level of digital literacy, and just high technology acquisition costs that create more barriers for these solutions to be able to scale. But all these challenges really create opportunities for financing providers. They can also increase climate resiliency for farmers by offering better access to real-time and high-quality data that allows for adaptation to the impact of climate change. So to understand the landscape of these solutions and the different types of opportunities that are out there, we first segmented the landscape into three broad categories or three business models, each connected with different parts of the ag value chain. And these categories are agri-tech solution providers, bundled service providers, and fintech solution providers. And the following slide shows a preview of what this landscape looks like. So in agri-tech, companies typically provide innovative digital and technological solutions in the ag value chain, aimed mostly at improving yield, efficiency, profitability, and sustainability. So this is the most established segment, as you see. It makes up a little over 50% of our sample. Majority of activity is focused on improving productivity through data and analytics, just 33%. It includes things like geolocation mapping, smart devices, AI, and IoT. Then we have access to markets, which enables farmers to access better prices and more buyers for their products. And farm management and solutions makes up about 22% of this piece. Then on the other side of the spectrum, and I'll come back to bundled services, is fintech. So fintech solution providers have digital innovations focused on access to funding, allowing smallholder farmers and agri-SMEs to be able to buy the inputs and equipment they need, be more efficient in farming methods, get insurance, and other types of financial services. This area is a little smaller in terms of number of players in comparison to the other two segments. And mostly, the most prevalent offering is really in lending. It makes up 58% of the sample, and then it's followed by insurance and other models that really try to leverage new data that comes out from some of the information gathered on the ground to provide alternative credit scoring and other services, financial software for e-commerce, payment platforms, all enhancing access to finance and reducing transaction costs for farmers and SMEs. The last sector or type of a business model outlined here is bundled services. So they provide a comprehensive range of offerings, which can span both agri-tech and fintech solutions, and really address multiple barriers across the agricultural value chain. This is a more emergent segment. It's about 26% of our sample, and it's starting to gain more and more traction as single product providers are expanding their offering and consolidating different types of services under one umbrella in order to gain more traction and really access more types of customers. So the majority of the solutions within the segment offer at least 3 different products and services, either across the ag-tech spectrum or the fintech. And as you see here, 70% includes both agricultural and financial offerings within that bundled service. After this initial segmentation, we developed a prioritization framework, which I'm sure you all are curious about. And Joana will explain further how we narrowed down the types of companies to target for scale.
Thank you, Anna. So yes, as Anna mentioned, based on the insights from our research, the ecosystem segmentation, and stakeholder interviews, we created a prioritization framework to help us assess business models. And what this involved was really outlining the characteristics of those models, such as the solution type, the target customer, the broader enabling environment, as well as the funding availability. But also defining two key criteria across investability and impact, which included considerations such as the scalability of the model, the commercial viability, as well as how replicable those models are in other geographies. In addition to that, there's social and environmental impacts, right? And or the model's potential to unlock finance and to increase climate resilience for target customers. Next, based on the framework outlined above, we rank business models across the investability and impact criteria, and we identified a couple of models that have the highest potential to scale and unlock finance. The first two included data analytics and market access, which are from the agri-tech segment. And both of these models scored high on the scalability and commercial viability criteria. They've also attracted strong interest from investors and have the most mature investment pipeline from pre-seed to Series C stages. Next, another model, business model that stands out is also the ag and financial bundled services. So this includes predominantly early stage companies, which are starting to actually attract more investment. And these business model also scored high across most criteria, indicating its high potential to scale and unlock finance. And lastly, just briefly to highlight the fintech solutions and specifically those that are focused on the agri sector. Overall, they seem to have struggled to scale and prove their value proposition. And I think, typically they are associated with high operating costs and generally lack specific agri-related services to diversify their revenue streams or to address customer needs beyond finance. So next, the result of our prioritization is essentially three main business models, which we believe have the highest potential to scale and unlock finance. And the first one is the ag and financial bundled services. So these are companies with a comprehensive range of services across the value chain, as Anna mentioned earlier. They include both agri-tech and fintech solutions. This is an emerging segment, and typically companies in this segment are growing organically their service offerings. However, as she mentioned earlier, there is an expectation on the market that single product providers will actually start consolidating to form such bundled offerings in the future. The companies in our sample from this segment have started to attract more capital, and as you can see, so far they've raised over $100 million, although just a caveat that's heavily concentrated in a handful of companies that are raising later rounds of funding. In terms of their impact, these models have the potential to address multiple challenges, improve accessibility and uptake of solutions, and also offer technical advisory, and specifically around sustainability practices and climate smart technologies. So one company to highlight within these business models is Pool Advisors. They're a tech-enabled agri-insurance business offering insurance, but also remote crop monitoring and analytics, as well as farming advisory services to help farmers grow sustainably and mitigate production risk. Next, the ability to access markets and sell products at fair prices has been identified as one of the biggest challenges for agri-SMEs and smallholder farmers. So we believe that market access business models have high potential to scale and unlock finance. These are typically digital marketplaces that connect buyers and sellers and offer a range of services, including access to digital payments, efficient product distribution, and others. From an impact perspective, they can unlock access to regional and international buyers, as well as access to fair prices, and as a result, help improve cash flows and mitigate credit risk of agri-SMEs to financial providers. They can also offer information about sustainability products and techniques on their platforms to help improve climate adaptation. An example company here is Twiga Foods. They're a mobile-based food distribution marketplace connecting farmers with vendors in urban markets. They create an efficient supply chain and enable clients to improve profit margins and creditworthiness. And next, the last business model we wanted to highlight is data and analytics. So these are businesses that collect, aggregate, and analyze data. This could include data and analytics on weather, crop health, farm size and location, product type, and others, and essentially enable more informed decisions for stakeholders in the ecosystem. Lack of data is one of the key challenges preventing financial providers and investors to increase financing to the sector, but also for farmers and agri-SMEs to manage their production risk. So in that sense, accurate and reliable data can help improve productivity and reduce agri-SMEs risk profile, but also allow financial providers to better understand agri-customers and manage their loan portfolio risks. Reliable field and climate data can also help agri-SMEs and smallholders become more resilient to climate change and climate variability. And an example to highlight here in terms of a company is Meridia from this category. They use a combination of technology and on-the-ground expertise to digitally map boundaries and help secure land rights, and as a result, unlock land value and collateral for smallholder farmers. So these were some of the key findings so far that we wanted to share. As we mentioned, our study is ongoing. We'll continue to build on it in the coming weeks. So pass it back to you, Amanda, at this stage. Thank you.
Thanks for that great and concise and timely presentation. Thanks. I guess, Emily, am I correct that we are going to do some sort of a poll to figure out who's in the room and who is online so that the questions can be answered within that proper context? Okay, so I'll pass it over to you, Emily, to tell us what questions we may be asking in the poll we're asking respondents to respond to.
Thanks so much, Amanda. Okay, so we've just launched a poll right now, and the first question that we would like everybody online and people in the room to respond to is, how would they define viability in the context of digital innovations for agri-SME finance? So we have three options here: 100% financial sustainability, strategic use of some concessional or grant funding at specific stages of growth, or some ongoing dependence on concessional funding to support social missions. Let's see what results we have from the online team. We've got 75%, 100% sustainability, and 25% strategic use of some concessional or grant funding. Maybe we can take a poll of the room. Who would say 100% for financial sustainability? Raise your hand if so. 1, 2, 3. 3 votes. 4 votes. Perfect. Strategic use of some grant funding at specific stages. Any votes in the room? 1, 2, 3, 4, 5, 6, 7, 8. Okay. And finally, some ongoing dependence on concessional funding to support social missions. Any votes? Right. Okay. So the online audience prefers 100% financial sustainability with 80%, and 20% goes to strategic use of some grant funding. So back to you, Amanda.
That is interesting, especially, and I'm sure that we'll hear about how realistic that is from our panelist, Hemense, who actually is a fintech provider, and I'm sure has not only, thought about this in terms of commercial viability and is looking at donor resources. In fact, I know he's working with donor resources. So I guess right now what we're going to do is ask a series of questions. And I think if that's okay, my first question is to our colleague, Esha. Singh from IFAD, please introduce yourself. And I am going to, after you introduce yourself, I'd like you to answer this question. I mean, was there anything sort of surprising for you that you heard from the presentation from our colleagues? And, you know, how do their findings align with IFAD and your team in ICT for development? And, you know, maybe you can talk a little bit about how your priorities have evolved also in this space.
Okay, thank you so much, Amanda, for the question. Just as and good morning, everyone in Mexico, and good afternoon, good evening, everyone joining online. Very interesting poll to start with. I think it's going to be a mixed bag in terms of responses that you hear from the panelists, because I think pretty much everything is true as of now in this industry. So viability is something that, you know, we're going to achieve hopefully in the coming future. So, thank you so much for the question. And I mean, I want to start with mentioning that, you know, IFAD approved its first ICT for D strategy at the end of 2019 for a period of 2020 to 2030, recognizing that there is need to formalize and strengthen our existing work on digitalization for agriculture and rural development. So not that IFAD has not been investing in digitalization, it's the need to strengthen and formalize our work that the strategy was approved at the end of 2019. I want to start by saying that, you know, in the presentation that Anastasiya and Joana covered, it kind of confirms with our own learnings and validates our own internal knowledge and learnings from the ground, where we see that, of course, there are a larger number of one or two service provider, so agri-tech and private sector companies that offer one or two solutions in the entire spectrum of the agri value chains. And there is an emerging sector in terms of the bundled services. So this kind of confirms and validates what our finding has been and what our interactions has also been on the field. We also see that there are limited number of fintech players in the space, and this confirms with the overall trend of limited financing that is available to agri SMEs and smallholder farmers in the sector. And again, on the point that Joana mentioned about the lack of data on farming and overall limited risk appetite among traditional lenders that we have in developing in these developed countries, and that kind of adds to that there is limited number of fintech players and limited financing that's available to fintech players as well. Overall, I want to highlight that, you know, IFAD has been investing in the Eastern Southern Africa region, where the study was actually carried out, and using both grant and loan resources, which kind of again goes back to the poll that we were talking about, both in developing in-house solutions as well as engaging with private sector for digital solutions to support smallholder farmers. And some of these examples include, you know, working with agri-tech companies on e-extension services, again, pure play agri-tech player working on just one segment of the value chain, to working, developing solutions in collaboration with farmer organizations, downward compatible solutions like the USSD platform, to look at a range of bundled solutions, to also then working with financial institutions such as Financial Holdings Limited Bank, to kind of scale up their existing digital and mobile bank accounts for mobile payments, transfers, and savings. So there has been a range of experience that IFAD has in implementation. And while I say this, that we've been supporting a number of pilots across our programs. And going forward, what we want to prioritize, and also learning from the report that was just highlighted, we want to prioritize scalable and sustainable solutions. I think some of the criteria were highlighted in the report, specifically on investability, impact parameters, and those are the same parameters that we want to apply in our program of work. Commercial as well as social and environmental sustainability. Again, going back to the poll that you just conducted, that it's not just about commercial viability, it's also about the social impact that solutions can have on the ground. The report kind of mentions also about business models, with the most potential, and that includes data analysis and market access. And while this is very useful for us to prioritize, I would want to say that IFAD is open to solutions and models that focus also broadly on the entire spectrum of value chains. And again, going back to saying that downgraded compatibility, especially solutions like SMS, USSD, IVRS, are extremely essential for the clients that we want to target, which is the smallholder farmers, agri SMEs, and farmer organizations. And again, access to finance. As the study has highlighted, that there is a lot of scope for fintechs to rise up. Access to finance, and especially adaptation finance and climate finance, is going to be a focus area for us, which could mean that there is going to be extension of grant resources, of working through our program of loans and grants to engage with such players in the market, so that mature and sustainable models can emerge from the field. I also want to highlight that geographically, a lot of the agri-tech and fintech players are in sort of hubs. You could say in East and Southern Africa, it could be South Africa, Uganda, Ethiopia, and Kenya. We also work in a lot of different fragile countries, and that is going to remain our focus, that wherever there are no players, I mean, IFAD is there. So that's going to remain our focus, and we will prioritize that work going forward. I'll stop here and back to you, Amanda.
Great. I'm sure all of those in the room and online will be happy to hear that there's more to come from IFAD in this space, and even some grant resources to take some of these activities to greater scale. Awesome. Herman, maybe I can ask the next question to you, and maybe you can start with just telling us very briefly about ADAPTA Earth and sort of how that was designed and which challenges you were, trying to solve with that platform, and the way you're thinking about viability and scale. I've seen your financials, or your certainly your projections, so that's going to be exciting. And maybe you can tell us also about the role of concessional capital, because I know that you have some experience there. So on to you, Herman.
Thank you, Amanda, and thank you, everybody, and thank you, Safin, for inviting us to this important meeting. ADAPTA is a Kenya-based climate adaptation technology company. The best way to explain about what ADAPTA is, if you think about how credit ratings and corporate ratings actually transform finance in the 60s and 80s, 70s and 80s, we always felt, and the previous discussion, the previous panel, I think we always tried to put the pressure of the challenge of climate adaptation or access to finance to the lack of knowledge or capacity of our clients, which are the smallholders. I worked for the IFC for 26 years. I was the global head of agribusiness, where I launched the first blended finance fund for agriculture in the world. And what it taught me is that while we're very good as bankers to try to mobilize risk mitigation pools of capital, we're not very good at using data to be able to help us do a better way of underwriting risk. And when you think about agricultural risk, the major risk in agriculture is climate change. So rather than be focusing on how do we help the farmer, our focus has been 100% on how do we help us, the bankers. How do we help a banker use data to assess the biodiversity, soil, water, and climate change risk that literally impacts agriculture day to day? And if with that information, we're able to suggest changes on the way our clients, farmers, practice their work by adopting some adaptation techniques to make it more resilient, at the end, the goal is that should reduce losses, therefore should reduce NPLs for the bank. So that's ADAPTA in a nutshell. We're basically a unique animal, I think, in the world. And when I went to the Bill and Melinda Gates Foundation to talk about this, they immediately caught on the uniqueness of ADAPTA, which is rather than be, the problem of agriculture is really not the farmer. I don't want to blame the farmer. The farmer knows a lot. It's really us. It's really about how do we give a bank the ability to actually use data to change behaviors. And we've actually done a number of transactions, all business related, so revenue generation or for-profit transactions. And it's taught us a lot about the how we can actually make an enormous change if we, in our underwriting skills, we change the way we mobilize data and we actually make decisions that will help our borrowers to become more resilient. You asked Amanda about the importance of concessional capital for ideas like us. I think this is an immense issue, because when we think about most of the fintech in Africa, most of the VC investments have really gone into fintech. So about 85% of all VC investments go into fintechs. We know, I think, as Anastasiya and Joana were explaining, the track record of fintechs is mixed, and very little money is left for other ideas like insurtech or agtech or as climate tech. So I think concessional funding plays a critical role to actually seed some of these innovations, so that we can actually break through and become obviously more profitable. At the end, if you're not sustainably financially, this is not going to work. So I think it's welcome. I welcome IFAD's intervention. I think it's important to actually have an ability to mobilize more seed capital to actually promote more of these ideas. But I want to make the point that, to me, the biggest issue we have when we think about climate finance or ag finance is really about focusing on us bankers, as opposed to focusing too much on the poor farmer. And I think if you see today, Amanda, what technology is able to do, it's just amazing that from the tip of my fingers, I can get information of any part of the world about the soil conditions, climate conditions, water conditions, biodiversity conditions, and I haven't spent a single dollar actually flying to the place. So if we can actually mobilize this data, I think we want to, I think from ADAPTA, we want to make an enormous change. Our model is basically, we have a climate adaptation, a climate and sustainability score. We call it the CS score, basically, that allows us to have two revenue models, one being selling this tool to banks. So our growth that you saw, Amanda, and you were mentioning in our projections, a lot of the growth comes from fees, subscription fees, that we're hoping to sell, like S&P or Moody's sells the ratings to banks. The same thing. We want to sell our tool to lenders, so they're able to use it to assess the risk and be able to mitigate some of the risks in agriculture, while helping clients become more resilient. And the second one, we're also a financier, so we use our tool for our own financing. So we do finance cooperatives and SACCOs. Those are really our two critical entry vehicles into the sector as aggregators. We don't do microfinance, but we do work with cooperatives and SACCOs to support smallholders. Let me stop there. I think any questions, be delighted to answer, Amanda.
Are there any burning questions online that have come in? Let me know if so. Otherwise, we'll hand over to our colleagues at AFEX. I mean, as you're sitting here, you've been sitting here, you're in Latin America, you come with the Nigerian perspective, right? And I'm curious as to sort of what aspect of all of this aligns most with your experience of developing digital solutions for your sort of commodities trading program, which has been highly successful. Everybody knows about AFEX. Just really curious about your take on this, and what have been the challenges for you all in terms of balancing the focus of your business needs as opposed to supporting sort of growth of your clients in the design of your digital solutions. So I would love to hear.
Thanks, Amanda. Hi, everyone. It's great to be here. It's been a fantastic time engaging with you all so far. For us, it's been great to also see the parallels that exist between the continents and the countries. Listening to the presentation, a lot of the issues that they raised resonated with us, especially around management of risk, and then even going on to its data analytics, and then bundled services. All the companies that she mentioned, Twiga, Meridia, Pula, they're all organizations that we have engaged with in the past. And to see that parallel run through is really something that drives home for us. And the need for concessional funding as well. I mean, to answer that question, we've seen it in our experience that, before a warehouse that we establish is able to sustain itself. It takes a good 2 or 3 years before it gets to that point. And how else are you able to do that unless you get that concessional funding to kick off and trigger that engagement? So yeah, that's real. And about the challenges that we face, it's definitely not binary, right? Between running a successful business and then having great impact on the farmers' lives. That there is that tension there, but I think that tension makes us as an organization more efficient and also enable us to focus on delivering impact more. So first and foremost is the cost of capital, and that's always going to be an issue. There's a reason why this demographic that we target, in being SMEs, have specifically high rates, and that's just a reflection of the risk that comes with doing business with them. But if we're able to really break down and look at the specific levers that are driving that risk, that's where we can actually add value and be able to manage that process, and hopefully then get cheaper loans because we're able to understand the risk that we're actually getting into and bring down that risk profile for that demographic. Along with that falls into data, and I really appreciated what Joana was talking about earlier around the need for data, how to actually apply that. For us, we think specifically around a credit rating system for the farmer. So if we're able to use behavioral tactics to determine the likelihood of this farmer paying back their loans, that's actually going to make the transaction a lot cheaper and actually going to give us a lot more confidence in giving them money. So the quality of the recipient, the quality of that farmer becomes increasingly important. Also, I think about shared data as well. I think it was Aseli that was talking earlier. Every company is very, very tight and close with the data that they have. And there's that fear that we're going to give out business if we share data. But what often happens on the field is that a farmer collects a loan from us, collects a loan from another party, and that totally changes their risk profile in doing that. So if we're able to share that data amongst ourselves, I think that'll go a long way. And lastly, in terms of a challenge that sort of keeps me up at night is scale. We're in the lending business, and if we lend out, say $100,000, and we have, 1-2% non-performing loans, it's okay, it's acceptable. But as we scale and as we grow, that becomes a bigger challenge. So if you lend out $1 billion and you have 1 or 2% non-performing loans, that becomes a significant issue. So how do we scale and increase our operations and increase our business, but become more efficient as we scale, is another challenge for us too.
Okay, we've got some questions, and I see a question also from the audience. We'll take one online, and then we'll pass to Adnan.
That sounds right. I'm going to quickly read one of the questions that came online from Madeline Muitiga. Sorry if I'm not saying that right. Who's asking, how can IFAD work directly work directly to market ag tech houses like ADAPTA? I'm guessing that's.
Okay, maybe Michael, thank you. I see the question also online, and maybe I can answer this one. Thank you, Madeline, for the question. And just as a very quick response on this one, we are fully open to engage with agri-tech companies through our program of work, which means that as a financial institutions, our programs are with member countries, member states. So based on the geographical interest and work of the companies, we look for local and customizable solutions in countries. And so that means if, for example, ADAPTA is interested in working with us, say, for example, in Sudan, we are open to engage with them, understand what their model is, understand what their solution is, and how it can integrate into one of our existing or newly designed program, which could be a loan program or a grant program. I'll give you one example from one of our projects in Asia Pacific region. We've actually supported the development of this solution, a private sector agri-tech solution, which has now become fully sustainable on its own. It's called Chamka. You can actually see it on the App Store as well. It's by Bronx Technologies. This company was supported through a Korean supplementary funding, and it integrated with the farmer cooperatives within our program. And basically the app supports both crop advisory as well as access to inputs. And through the integration of input dealers and financing, it was able to become fully sustainable over the course of the whole project. So this is one way, and that's one of the ways that we can engage with agri-tech companies. We're also currently working with Cropin through a Jeff funded project in East and Southern Africa. We worked in the past with Precision Agriculture for Development, and these are all programs that we've done in the past, and we're open to such kind of models. We're also open to direct subscription models. So wherein farmers, if it is a business model where farmers are willing to pay, or other kind of stakeholders are willing to pay, it's about us doing the matchmaking. We're more than happy to do that as well. So multiple ways of engaging with our projects and the work that IFAD does. Over.
Great, lots of opportunities there. Hernan.
Thank you. Good afternoon, colleagues. Hernan Manson from ITC. I have a question maybe for our colleague from AFEX, as well our colleagues from Palladium. You talked about the importance of the bundle service provider, and you talk about the market access, and I'm really glad you're bringing this in the discussion. Now, in the work you've done, and also AFEX, you're working with them in a commercial point of view, these platforms. How many of these platforms are actually offering a reward, coming from the market in terms of price, in terms of incentives for actually those products that are greener than others? And the point is, as a farmer or farm organization, you must do investments into greening your operation. You adapt and all of this, but then do you get a reward from the market for it? And then do these platforms actually pass the reward to the farmers?
That's a good question. Thanks. So it's a challenge, right? I was nodding my head along with everything you said until you said, like a green solution that would lead to that reward. So my gut answer is yes. I mean, a lot of the platforms do that. I can speak from an AFEX perspective when it comes to like sustainability and traceability, especially along the cocoa value chains. There are premiums that come with trading on the platform that a farmer does get with dealing with us. Now, when it comes to, other commodities and other value chains, I would say the premium comes more from the mechanization and industrialization than like the quality of the products that actually come in, than necessarily from, say, any green solution that the farmer, or green practice that the farmer is practicing. And that's just from the perspective that I've seen.
Yeah, I mean, I think we have a couple of cases of platforms like this that we're working on in Palladium, principally in the cacao supply chain and principally in Latin America, not so much in Africa. And I would say we've done a number of landscape analyses of cacao prices in Indonesia, in East Asia, in Africa, in Latin America. And one of the saddest things that we've seen is the lack of sharing any sort of price premium for anything related to traceability to farmers. The costs are ridiculously high and the benefit to farmers is nil. Absolutely not captured at all by them. So I think but that doesn't negate the need for these platforms and for more efficient supply chain solutions that are upheld by digital. And the key there is really, and what we found is this bundling of it all. And how do you make that work? It can't just be a digital solution for traceability. That you will not get any benefit really to farmers in the short term when it comes to a price premium. That's a fallacy. I think we can, at least in the cacao value chain, we could just say that is not true. Now, can you help farmers improve Productivity, absolutely, through digital solutions. Can you help them access better markets through differentiated products? Absolutely. Can you make a go at fine flavor cacao at scale in Latin America and compete with Africa? Yes. And all of these are underpinned by digital. The challenge is, of course, how do you keep these very complex multi-system partnerships moving after the grant money is gone? We just finished 12 years of working in cacao in Peru with a cocoa alliance that is now winding down. And now what, right? Now what, we're working with actually commercial cacao companies to figure out how we can take it to the next level, because the donors are like, did that, move on to the next supply chain or something like that. Donors are fickle, but the supply chain continues. So, I think that what is key, though, is digital has been really important in terms of expanding finance, at least in the models that we're working on. And it was sharing data that we had collected at scale for 25,000 farmers with a lot of financial institutions, and they're being able to do a very quick screening of them all to figure out who could access financing. And when you're part of a big consortium of actors where everything is set up, the technical assistance, the support to farmers, the markets, that reduces their risk significantly. They were happy to lend. We did quite a lot of lending to those farmers. So it can work, but again, complex. Okay, any other questions from the room about digital solutions? Michael? Or from the web?
Yeah, I actually have a question, but I should check if there's anything else on the web. So my question is sort of a two-part, and it's to everyone here on the panel and Amanda as well. Looking forward, so we've talked a lot about the complexities of scaling and these issues. I guess one of the questions is, what gives you guys hope that there will be a solution in the future, and what would it look like? So where are you seeing hope? Where are you seeing potential to actually overcome these types of solutions? We're talking about bundling. Is it like some version of Amazon providing everything everyone needs at a global level, or is it right to see that each region sort of needs an adapted solution to their own sort of issues? What is it that we're expecting? And the second part is simply, what role can CEFN play in that area to move the agenda forward? Thanks.
Anyone want to take that, Herman?
Maybe, yeah, if I can start. Michael, I think that's a good question, and we remain extremely optimistic, and I'll tell you very frankly why. I've been in this business, like many of you, for many, many years, and I've done cocoa and everything, but I've never seen two big drivers that I think will change our business. One is basically this commitment to net zero. I think it's a fact of life that you're seeing that across the world. And how is that translated into central banks actually asking their banks, you have to do a better job looking at your impact on climate, but now even how you actually evaluate projects and how you book projects. So I think that's a huge push that will change the industry. And I think we remain, at least as ADAPTA, trying to do our climate score as very optimistic. I think the equally important is, I think the Ukraine war has put a lot of pressure on governments around food security. And we are seeing that in East Africa. We're seeing that in Kenya, where there's a lot of talk about how banks are going to have to enhance their work around agricultural finance. Because otherwise the push is going to come from a central bank or a government saying you need to lend X% of your assets. We know that doesn't work, but I think that's actually coming. And I think food security is becoming a huge issue. So I think these two drivers we see as a great opportunity, at least from the ADAPTA perspective, to actually sell this tool to banks. So we remain quite optimistic about that. I would have to say how Safin can play a role. Look, I think you're unique, right? I think there's nothing like Safin in the world. I think somebody from the previous panel was talking about how Safin is represented in Africa, and I think that would be something I will try to improve. But aggregating ideas around digital technology and digital solutions, I think it's very important for the ag sector and for ag finance. I think your knowledge, you can play the knowledge base, but you could also play this, I think our colleague from IFAD was mentioning, but sort of the matchmaking role, right? I think there's a lot of people trying to do more on climate finance, but there isn't really a vehicle whereby you can actually go to A, B, and C, and everybody has different. Climate finance may be one thing, but then there's a number of other things that you need to meet their criteria. So I think simplifying that process will definitely benefit many companies like ours to actually grow. So we remain quite optimistic about the future. I frankly see a very different industry from what I saw 20 years ago.
I do have more questions, but if you can, you can ask questions. This isn't my session; it's your session. So, would you like to respond also to this one?
Thank you. Yeah, I was gonna say I believe in Web3 and distributed ledgers, but I don't know how else why. No, no, I think to answer your question specifically about bundled services, yes, I am optimistic about the ability to provide solutions just because I've seen it on a practical level. So we can take what we've done at AFEX in Nigeria and replicate it, understanding the cultural nuances and more strategic changes that we have to make, partnerships, alignments, and say that we've seen a successful model being replicated in another African country, in Kenya specifically. And then the same model can be then moved on to Uganda, because like there's similar issues and similar trends that are taking place while tweaking it. So yes, we do have to become this sort of wholesale, but not just a marketplace, more of a platform where that other people can then come in and add their own value add, and we all build and grow together.
If I may, I agree with everything that Hemense said and also you, but I think, bundled, we've heard it all day and for the last couple of days, this concept of bundled services. I was really excited to see that in the presentation and know that I did not share that information with my colleagues. They came up with that on their own based on these. That's what's coming from the market, okay? So I would say the pressure is mounting not just from governments, but it's mounting from private sector companies that are big, key players in this entire agri industry, right? They recognize that things need to change, and they're the ones that are actually hiring firms like Palladium to help them figure out new solutions that require bundled services, complex multi-stakeholder partnerships. That's the part that they don't get paid to do. They didn't go to school for that. And they really do seek out, that kind of advice from others. So I think the other thing is that, some of these solutions are already here. We saw them, right? I think what is helpful, of course, in some of the places where they're working in the previous session are places with a lot of people. If you can achieve scale faster because you have a big, population, that's something in your favor. But I'm very optimistic about the solutions that are out there. I think when we talk about is this an Amazon thing? I think those are the silver bullets that we shouldn't chase, right? I really do think that maybe it's more of a number of solutions that work for that particular environment, for that region, for that supply chain, and that's okay, as long as they are, commercially viable, sort of, and they can stick around after the donor money is gone. So, and I'm really, it's a little sad to see that a lot of the venture capital is going into the part of the of that landscape that isn't really representing the opportunities for scale. So I found that to be really fascinating, and I'm wondering what my colleagues Anastasiya and Joana think about the potential for the bundled services sort of venture capital. Do you see that that's something that actually has legs?
I think so. I can begin answering that. I think we're definitely seeing that as as a sector that is emerging. There's a lot of consolidation in the market, as I mentioned. So a lot of the services that started with just a few products, maybe in agri-tech specific solutions, have realized that they need to incorporate and bundle solutions that provide access to financing as well. And we are seeing companies that are attracting significant amounts of capital, as Joana mentioned in her part of the presentation. Over 100 million has been raised by a group of these companies in agricultural and financial bundled services, and there are a few in that mix that have raised growth capital. So really, going into Series B and C. So there are companies that are proving that this is scalable and attractive for investors. But on the other hand, I guess the other side of that equation is that understanding that majority of that number, 100 million, is actually going to very few companies that have reached the scale. The rest are getting very, very little. They're still at the pre-Series A, seed stages, and that's where a lot of the support is needed to get them to graduate and really attract more capital. And I think going back to the question, like in terms of what Safin can do as a network, it's I think very helpful that you are trying to be very thoughtful in understanding what the market needs and gaps are and filling some of those gaps. So concessional capital that Herman also spoke about, where is the concessional capital needed in order to unlock those solutions and help them reach the next level? Sometimes it's a guarantee or different type of loan that has more patient terms that enables them to get to a better stage to attract commercial and venture capital.
Thank you. Great answer. And almost we could use that to sum up the entire session. So I think we should close because we're really close to the end of the session, correct? But I think just in closing, I think there's a lot of hope. There's fantastic models. There's some really smart people out there really chasing down new technology solutions. There's a ton of money. There's donor interest. I mean, everything is in our favor to kind of take these models to scale. So let's just keep plugging away and use Safin as this marketplace of ideas and learning network to take this forward. So thank you very much, everyone, and especially to all our speakers. It was great to hear from you today. Thanks a lot.
Thank you, everyone.
Thank you, everyone.
Great, thank you.
Thank you.